Hey guys, in this video I want to talk to you about what I've been up to over the last few weeks. I know I haven't done a video in a while. I have actually been busy with some of my own clients that I'm working with. As you know, I'm doing investing and trading coaching, that has kept me busy over the last few weeks. But what I wanted to talk to you about in this video is where I think the market is going, not just in the short term, but also the longer term, looking at the next couple of years or so. You see, we are currently in one of the best economic states that we could ever be in. And I know that there's many economists out there, I know that there's many articles online suggesting that we are headed into a market crash or a market correction, that the stock market is at all-time highs and it needs to crash and things like that. I keep hearing that the last market crash was 10 years, so we're due for a market crash now and things like that. But the truth is that the economic state that we're seeing, not just in the US market, but across the world, is actually a growth economic state. So many years ago, when interest rates were high and the property market was booming in America, there was signs leading into that actually did point into a severe market crash because of the overbought state that the real estate market was in. Now, currently, we're seeing a complete different. It's a contrast of what we saw in 2007 leading into the 2008 crash. So the economy in America is continually growing. We've seen some really amazing things come through over the last several years as far as earnings, as far as company earnings. We're seeing unemployment rate at record lows, not just in America, across the world. We're seeing jobs being filled in America. We're seeing companies grow and expand. We're seeing investments all over the world. We're seeing interest rates at record lows still. Now, I know interest rates are climbing in the US now, but the thing about that, and economists love to when there's an interest rate rise, they like to use that as support for the theory that the market's going to crash. But the thing about healthy economies is that when the economy is growing, we have to be putting interest rates up. So in America, the interest rates are going up. They're only going up quarter points at a time, and also we're still seeing interest rates at record low levels. So even though the interest rate rises in America, you may slow down the economy, they're doing it because the economy is growing. So when people talk to me about market crashes and market corrections, I challenge them with core data, because the data that we're seeing come out of the US constantly, months on end. Now, if you recall, if you've been following me for several years, it's been nearly 2 years that I've been bullish the S&P 500, that I've been talking about the economic growth that we're seeing in the US, and we've certainly taken advantage of that. I remember Trump coming into power with the mess and the chaos that existed at the time. The economy and the promises that Trump did made in an election campaign looked promising to the economy and looked like they were going to contribute to the growth in the economy. So now we're seeing unemployment rate at record lows and things like that. And I still believe that the market has still lots of room to grow. I know the markets are high at the moment, and I know that a lot of analysts are predicting a crash, but the thing is, I believe that the market has the ability and has the capability right now to continue to push higher. Now, why do I think that? The earnings that we're seeing out of companies, the phenomenal growth that we saw in Apple in the recent report last week, the growth we're seeing in Google, the growth we're seeing in the top 500 companies in the US is phenomenal. Now, the stock market has been pushing higher and higher and higher for years now, but I believe that because of the strong earnings that we're seeing, and don't forget, Donald Trump did cut the corporate tax rate to 20%, which is something that has not happened in the US for a very long time. Now, that's going to increase productivity. That's going to increase the capacity for companies to grow and expand and invest. So I believe that growth that the companies are currently going through is going to expand into the economy, is going to expand into the other global markets. It's going to create more jobs, and as that happens, people feel more confident, people spend more, and it just stimulates the economy. So based on that, I believe that the S&P 500, and there's still heaps of opportunity for growth in stocks and shares in the US. Now, I know that the best time to get into the market would have been February or March this year when we saw that correction come through. That would have been an ideal time to buy. And I remember I did several videos about that. I sent emails to my clients telling them that this correction that we're having was providing opportunities for us. And in fact, for those of you that did get into the market around February, March, you'll be sitting on a very nice gain at the moment if you're still holding those positions. Now, I'm still bullish the stocks in the S&P 500. I still believe that there's plenty of opportunity out there. So if you're wanting to get into the market, I do believe that for the next 2 or 3 years, we're going to continue to see this growth. Now, we can't see markets continue to go up in one, straight in one direction constantly. Obviously, there's going to be pullbacks and corrections along the way, but because the strong economic data that's coming out of the US is solid and is proof that the economy is growing, I believe that there's plenty of opportunity. Now, the gap between the growth in the companies and where the stock market is sitting now, that's why I believe there's still room, because I believe that the market needs to catch up with that growth. So I believe there's a big gap between where the prices are sitting now of ordinary shares in America in comparison to the earnings and the profits that the companies are doing. So if you take any way away from this, if the key takeaway from this video is that you put just stop listening to the media, stop listening to the negative hype that exists, and focus on core economic data and the facts. And the facts point to the economy being in one of the best states that we've seen it in years. So it's definitely time to take advantage of that. Now, as you know, I've been working on my training. I've got a training where I'm teaching people how to trade and invest in the stock market, specifically in the US stock market. So if that's something that you want to get involved with, if it's trading the stock market is something that you've wanted to do for ages, I encourage you to check out my link below. I'll put it just below this video. I've created a free series of videos to give you some insight on the stock market and what I'm doing, and also about my coaching and training. So if that's something you're interested in, just click the link below and get access to my free videos. I hope you have a great week, and I'll talk to you soon.